As a lot of people know, today was FOMC, and as much as I know, and as least as I want to say this, I know a ton of people lost money today, just because they were being greedy, just because they were being impatient. Yesterday, I told myself I won't be taking an AM trade, so I decided to focus on everything else besides even peeking at the charts. And I think that was one of my greatest um, mantras of today. I think what I never do is use cash as a position and being patient as a position, especially because you just see so many people during this time with larger accounts make hundreds of thousands to millions of dollars. And when you do 60% of your portfolio, comparison is the thief and the killer of joy, life, happiness. Stop comparing. If you're in that boat and you're comparing yourself to others, you're going to be totaled. You're going to be toast. And as of right now, I want to be patient. I want to push myself away from distractions. And I don't make these videos just because I'm trying to get famous, just because I'm trying to make money, whatever the case is. No, I want a personalized journal of myself to myself. And if anybody along the way of me making these videos enjoys these and actually was like, oh, I could learn a thing or two, great. I love that. Um, because of the fact that when I was starting out 2 years ago, even I was trading 5 years ago, 6 years ago in COVID, gambling basically, lottery gambling basically, following random people on Twitter and making money that was unfathomable prior, making few $100s in 10 minutes. Like stuff like that is just crazy to me. But that's not what I'm here to do. I'm here to build wealth. I'm here to build knowledge. I'm here to build discipline and patience and understand that the market's always going to be here. Life's always going to be here. And as long as I stay patient and focused and disciplined, I could get what I want. If I keep my energy to myself and keep empowering myself, then I can get whatever I want and the life I want to live. So, let's get into the real stuff. I know all you clicked on what's the recap of today. I ended up, I would say, losing about $40 today. I'll throw it up on the screen for accuracy. About $40 today. And I do want to break down what my trades were, what everything was, and why I took them. So I think a lot of people enjoy videos like this. Honestly, market may gap up tomorrow, what it's looking like. Fed decision, maybe it was just fake out. And that's okay. So I'm going to remove basically all of this and kind of go and start out from the beginning. One, I already saw market sold off in this gap. This clear support, you could even see off of open today. We supported that, pushed up, try to push for higher. You could even see here, probably a bunch of people faked out up here and even faked here just to try to get a breakout of some sort. But market knows always what they're doing. So 148 psychological level. We see a clear breakdown, push up for higher. This is just trying to squeeze people out and push down further. What I liked is on the hourly, I was thinking, okay, we're going to continue down. Maybe we gap down, so there's going to be high volumes into close, which there was high volumes into close. But I'm thinking, oh, let me mark out these lows because of the fact that if we push down and close below here, then I think we're going to continue further down. Obviously, yes, the market was extended already, but I've seen what the SPY can do. And when the SPY has momentum and volatility, SPY will do whatever it wants. All right? So, where I was looking was on the 5 minute. I saw this break. Let me remove this right now. I saw this break. But then the next candle, regardless this is a wick or not, I saw massive amounts of volume. And at the same time, what I wanted to see was this get filled. So where I'm seeing is one, on the 3 minute time frame, there's going to be a lot of orders that aren't filled and can have volatility through these. This is called a fair value gap. some ICT concepts. This is what I started off on, and I was day trading and I was focusing on this, but these concepts I don't really like trading them in actual US based stocks, or the only time, if you see any time on my chart that there's a rectangular box, it will mainly be outlining a gap in price. Can probably show you one. For example, gap in price. There's just a gap down. I like these gaps because gaps 10 out of 10 times get filled. Um, 10 out of 10 times get filled. Stock I was in. This is just outside of this, but I'm just trying to show in case anybody's watching this as a recap to understand one, why other people are taking the trades that they take. Okay? So back to the SPY. So we're on the 3 minute. We see that there's this bearish fair value gap, which can be used to just tap price in and then reject. Because as you can see here, there is a 3 minute gap right here, but all we did is fill even to the top of it and just reject. So obviously you have to be cautious with these things and understand that there is some risk behind it. What I like to see though is that in this same wick of a candle, strong volume followed into these candles, and what happened was is that we had this like not so big body but strong wicks on both sides. And the next candle that printed had volume but stayed within the structure of this whole first candle. So, as you can see, if I were to just delete this and even delete this line for right now, just so we have less lines, this candle and this candle stood within it. So what I'm looking for is now a break of this candle's high. Obviously, if I was looking for the downside, then what I would be looking for is a break of this way to the downside, confirming more volume, and it'd probably be a higher pivot that would lead even further down. So what I waited for is that break. So entered off of this. Let me just put that here. Stop was here, and the target was at the sweep of these highs. So like in this range of so a little higher. And basically, yeah, price ended up doing that. Sat in some drawdown for a little bit, but stuck true to my plan. And what happened? If anybody trades on Robinhood, 0 DTEs, the last 15 minutes gets canceled out. So I basically took a $3 loss. I know, sounds stupid, but I'm fine with that. I'd rather take a break-even trade over than price just wicking all the way down here, it closing the trade, and I'm getting stopped out for a losing trade just cause. That doesn't make any sense. All right. So this was my second trade of the day, which also was a loser, and I'm kind of giving it away of what my first trade was a loser, but this banged as a trade. And some people may be asking, well, wait. Why are you using the top of the body instead of these wicks? One, wicks do not always get hit. Like, obviously, you could see if you targeted this wick, then yes, eventually it would have got hit, but that was literally right. No, it actually didn't even get hit until post market. So that trade wouldn't even have worked. And obviously you can do wicks because you could see this was, I think, 741, 740. So almost equal highs right there, which that's also clear indication of just continuation. And then boom, enter your shorts right there. I'm just saying this for example. Obviously this, and obviously the other target, whatever that 1 hour low was. I'm just showing an example. I didn't take these. I wasn't even watching for shorts. I was more so bullish on the market. only because the new Fed chair is what the news and the rumors are is he's overly bullish, but I like to hear from him that he's not trying to make any concrete decisions so fast, and he wants to just kind of see how everything goes. So we have here my setup, my trade. We're going to break it down from the daily and why did I come to all these conclusions. One, on the daily, I really like this level of resistance right here. Key resistance on the daily. Obviously, you see here, big volume comes up. This is our strong day. You can see this is one of the strongest bodies we've had in a while since a day like this, but that doesn't even have that much volume. A day like this, but that was pre-earnings. So something like this, good 6% day, strong earnings. This is another 6% day, but what I don't like is this is more like a recovery. This is showing me, yes, prices, like buyers are still in here supporting this key support, which was psychological level. Um, on top of that, let's break it down higher time frame or smaller time frame. We look on the 15 minute. What I liked was this candle that closed above, which I did try to get in, but by the time price closed above here, to me, there is no point. To me, 30-cent difference, you're just chasing at this point. That 30-cent difference, I'm chasing for that trade. So what I waited for was on the 15 minute. What I liked is that we closed above my resistance with volume, and price pulled down to the 8-day EMA and that reclaimed this level of support. So we reclaim, and I think that, let me go back on the 5 because this is how I put my stop loss. Sweep of these lows, and then I was targeting basically these highs up here, which is 30.46. So practically a 1 to 3 or a 1 to 2.87, same exact thing basically. And ultimately I got stopped out. I was risking little amount because of the fact that I could have risked low of day, and like I said, market could be gapping up into after hours. I really don't know. I don't really care honestly because Friday's a holiday and market's gonna be closed. So what I liked is that it's a little shorter than that, but this low, because once we cleared through here, as you see with this red candle in volume, so when you see a volume candle like this into your stop loss, you just know you're getting stopped out, and waited for it to actually get stopped out. You can see another 1% candle down. It just wasn't the right time, and it doesn't mean I'm done looking at cores. I'll just be waiting for that same exact setup to happen again. Obviously, you can see buyers are really not ready to step in this price range because of the fact that you can see all these thin days, thin, these bigger volume days, but it's all supporting price. So that's where I really like it because I think price can continue further up, but I just want to see stronger price action before I make concrete decisions. But other than that, those are the two trades I took. Ultimately took, like I'm saying, less than a $40 loss, and I'm okay with that. On top of that, we just have to continue to seeing what the market's going to provide to see how the Fed is even going to react and how most investors and traders are going to react throughout the markets as time goes on. We have midterm seasons coming up. Just a lot of eventful things, not to be fearful, but to be aware. I think as traders, we must be observers rather than the fighter. And you shouldn't be in a fight or flight stage while you got money at the line. You should be at a observer, and all I am is a sniper and a tiger. I just observe, wait, patience, and then I strike when I needed to strike. Because even in the sense of this course trade, I could have easily just got in here, waited for that 5-minute close, use this same stop loss and target it here. But as you see, one, the risk to reward is a whole 1 times worse. And on top of that, look how easily it gets rejected in reverse. So just something to point out. And yeah, so if you're looking forward to the next video, probably be coming in the next few days. I definitely want to do some more psychological videos because I think they will hit harder. Other than that, let's have a great rest of the week trading. Let's have a great next week trading whenever you're watching this, and enjoy the rest of your day.